What's up, Ichimoku traders? Chris Capri here, 2ndSkies, Forex.com. So, the goal of this video is really just to this is a pretty short video, but it's an important one because I want to make sure that we are always working with the same framework when it comes to time frames. And I have decided to codify it to some degree in terms of the time frames that I want us to be talking about, that I want us to be using, and that we will be using for this entire course. So it's important that you understand this and that you're not, poking around in time frames that we're not using, or if you are, you understand that we're really not going to give feedback on because we're not really using the Ichimoku methods in that kind of framework. So let's go ahead and get into this here. So the main time frames that we are going to be trading with are the weekly, the daily, the 4-hour, and the 1-hour. I am making a move, and I have been making this for a long time, of really abandoning trading the Ichimoku on the lower time frames below the 1-hour. I've really just found it to be ineffective. It's not that the Ichimoku doesn't have application, but the way I like to use Ichimoku and the way I'm using in this course is in such a way that we really shouldn't be using it on anything other than these time frames. And we're using each time frame in a we have different applications based upon the time frames that we're using. So let me go over this. So the weekly time frame is really built for position trading, and I'll show some charts in a second here, but it's really built for position trading, positions that you're holding for months, maybe years, up to a few years. When and how and why do I use the weekly time frame? So one of the things that I like to do at the end of the year going into the next year is to speculate and look at which instruments, or basically what do I think that particular instrument is going to do for the next year. And I do this on a combination of price action and Ichimoku context. And so I pull out the weekly time frame and I'm looking at multiple years. And I'm doing this to get a gauge of okay, what do I think is the more likely scenario, bullish or bearish, how bullish, how bearish for this particular instrument for the rest of the year. And that gives me a certain guidance in terms of, major support and resistance levels. Are we at extreme levels? Historical support and resistance levels. Are we seeing major changes in the relationship to the Kumo? Maybe we've been below for a long period of time. Now we're above it. Or maybe we've been above it. Now we're below it. So I'm looking for major structural changes. And I use this to guide my overall approach as to what I'm thinking that particular instrument is going to do for the year. Also, in terms of, and this is something I haven't talked about a whole lot, but I will talk about in the future, which is that I actually often change currency pairs on my accounts. And I do this usually over several years. If I feel that a currency is going into a particular long-term bull run or a long-term bear run, then I will switch my currency, the basic account of my currency, to reflect that. So I can make advantage, so I can make money not just on the account itself, not just on my trading itself, but also the currency adjustment as well. So for me, I'm really looking at major structural changes on this. These are positions that I'm holding for 3-6 months. Maybe I'm doing some options trading where I think for the next 3 to 6 months, I believe a major move is going to happen, and I will pull out the weekly time frame to do that. The daily time frame to me is mostly long term, but it does offer some medium term understanding as to what's going on in terms of the context. And so these are the trades that you're going to be taking for weeks to months, but you really shouldn't be in this, these types of trades for a full year. It's usually a lot less than that. Any trades that you're making on the daily time frame from an Ichimoku context perspective, more than likely you're not going to be in it the whole year. And you're really not using this time frame to take positions longer than years. So it's medium term in the sense that weeks to months is my general framework for medium term, and long term is months to several months, quarters, maybe a year. So I am using the daily time frame for long term trend changes or major daily trend changes. These are positions that I'm maybe I'm going to take a TKX. trade, or maybe I'm going to take, a major structural Kumo break trade that hasn't broken the daily Kumo in a long period of time. There's a lot of ways that I can be using this, but that's the basic framework. So, we got to understand that when we talk about the daily time frame, this is the kind of framework we're thinking of and we're kind of approaching. Overall, Ichimoku looks at the daily time frame as the most kind of like fundamental and pillar one, especially since the number theory is based upon that. It's based upon days. It's not based upon weeks or months or hourly candles. It's based upon days. And so anytime I'm doing any sort of like time or time analysis, it's usually on the daily time frame. So hopefully that clarifies it. 4 hour is a combination of medium term and short term. The 4 hour kind of gives you a glimpse into some of the moves that are happening on the higher time frame context, like the daily, but it also kind of reflects some of the lower term or shorter term sentiments going on. So these are the kind of trades that you're holding for days, maybe weeks. You shouldn't be holding any trade for more than 6 months. If you are, you need to bump up to the daily time frame. These are more like short-term and medium-term swing trades that you're going to be taking with this. And we'll get into more of this when we get into the strategies section. The 1 hour, which I'm using very infrequently and I'm using in a very limited fashion. This is for intraday alignment. If you're trading primarily intraday, you're trying to catch quick swings or major Kumo breaks, or you are, see Kifus or something like that. That's what the 1 hour is for. It's for short-term trading opportunities to where you are anticipating that you shouldn't be in the trade longer than a week. So these are the main time frames and kind of descriptions that we're working with. So now I'd like to just kind of briefly go in some examples to reflect that. Okay, so here's your weekly time frame. We can see that we had produced this kind of major A, B, C, D. Several Ds failed. They never broke above the C point. Failed. False break, it kind of made that and then broke right back above it, suggesting that the market was just way overdone. Maybe you had taken one of these kind of TKXs or something like that, or maybe you took a break on the wave structure, the C point being broken. You said, okay, I'm getting the next pullback maybe into the Kijun. That's what the weekly time frame is for. You're trading these kind of major long-term structures. You can see these structures can often hold in these moves. Like this move has been since Q2 2017, so we're talking already a year. This structure was 2 years long, so we're talking major structures, and we're talking big moves. And so I often look back not only at the beginning of the year of this, but usually once a month I like to check in on the weekly, or if we're getting to historical levels, historical lows, historical highs, or very close to that, I want to bust out the weekly. And so that's kind of the context of how I'm using that. The daily for me is a little bit different. What did I say? Weeks to months. It's kind of like short, medium term, or it's actually more like medium term swing trading and some kind of like shorter, long term trend trading. Here's a nice strong TKX, which produced a pretty big move. This is a good, 700, 800, or 600 pip move. You're trying to capture moves like this, and you're going to be holding for weeks to months. We're now below the Kumo for the first time in a long time, since November last year. And, after breaking below it, hit the Kumo and then sold off massively. You're looking for these kind of context or structural changes to where you're going to be looking for weeks to months to hold these types of trades. You're kind of looking for some bigger moves, 500 plus moves, but you're not looking for like the 1,000, 2,000 pip moves, because those take a lot longer, and those generally are what you'd be finding on the 1 hour on the weekly time frame. The 4 hour context, again, this is kind of like the short term and medium term swing trading. And so you can see we just had like a massive run in the euro dollar. The momentum is super strong. And so you're looking at this and saying like, okay, this is some pretty strong short-term momentum. I really don't want to be trading this on the bull side until we can at least get above the Kijun. Maybe this violates the price line. So you're kind of looking at this saying, okay, what am I going to be trading with this? Short-term, medium-term swing changes. Maybe there's a Kifu that you can spot on the 4 hour. We're going to be talking about different time frames later on that you'll be using Kifu. You can use a TKX trade or the wave structure setups. But the bottom line is, this is kind of, if you are leaning towards the short-term and medium-term swing trading, holding for days or weeks, catching, 2, 3, 4, 500 pip moves, and not holding them for too long periods of time, this is the kind of time frame that you're going to be working with. The 1 hour time frame, again, just short-term moves. Maybe you find maybe there's like a good trend, like we saw on the 4 hour on the euro dollar, and it just keeps it can just barely get past the Tenkin. So because it's below this most of the time, it's a high momentum move. So maybe you're looking for some TKXs on a smaller time frame with trend. So you want to capture this one here, and then you want to capture this one here, and you want to capture this one here. You're looking for these types of moves. These are short-term trading opportunities. Again, you shouldn't be in these for a week. Maybe you spot some context that's very favorable on daily and 4 hour, and you see that it's a high momentum move. So you're looking for, okay, how can I catch this high momentum moves? That's where you're looking for strong TKXs, which we'll get into later. But again, these are the kind of things you're not using massive context on, or you're not applying massive context and value to the 1 hour time frame per se. It's more of like, hey, I'm just looking for some short-term trading opportunities because the medium term and the longer term context is very clear and the momentum's very clear, and so I want to be taking advantage of that. So that's just kind of the rough outline. We'll get into more details of this later. So that's pretty much it. I want to say, let's see, is there anything else I'm looking at my notes? No, we're all pretty good on this one. It's a pretty short video. It's just that we're all kind of working with the same time frames, and anything below this, I'm really not going to explore or get into. So you're kind of on your own on this one here. It won't be something that I'll really give feedback on. I will only be giving feedback on daily or weekly, daily, 4 hour and 1 hour, so that we're all kind of on the same page. So that's pretty much it. I hope you enjoyed this lesson. I hope it kind of gives you a good context for how to progress forward. And I'll see you inside the course and in the next video.